Hey everybody, Garrett here. I hope you're having a great day. I wanted to make a video addressing why today is very different than the 2008 to 2013 great financial crisis and why housing prices are not going to drop significantly or much at all depending on the segment of housing you are looking to purchase in. Also, I wanted to address the negativity and the doom and gloom and all the crash bro nonsense news articles that exist today and why they are not the same as before. If you can prove me wrong in the comments down below, I am all ears, but do know that I am looking for a reasoned, logical argument and that I run a mortgage company. I have multiple properties. I rent to people. I know what's going on in the rental market. I know what's going on in the employment market, and I'm in the trenches day to day in the real estate market. So I know what's going on with multiple offer situations. I know what's going on with prices going down in certain segments of the housing market. I know all this for the reports that most of these negative news articles are based on 60 days before they're written. I'm going to respond to a lot of these things based on firsthand experience and based on data-driven analysis from past research. So make a case why now is a great time to buy depending on your exact price range and category. First off, I want to address that I am a millennial. I am a child of the great financial crisis. My mom had to sell our family home about a year or two before I graduated college in the middle of this because she was laid off and on extended unemployment for over a year because there were no jobs to be had in her sector. The entire economy had been ground to a halt. Her COBRA healthcare was something like $900 a month back in 2010 dollars, which is probably like $1,500 a month in 2023 dollars. And the housing payment was probably around $2,000 a month, if I recall correctly. So her unemployment insurance was not enough to cover both her health care and the housing payment, especially not also the monthly bills. So eventually she was a forced seller, not because of the loan type that she had, but because her savings were dwindling and she did not want to have to be a short sale or a forced seller in a foreclosure. She wanted to sell it off while she still could get some equity and move into a more manageable, cheaper home. With that being said, I totally get it. Millennials and the younger generations will think, wow, the economy isn't booming. That means that the housing prices are going to crash 50%. That's absolutely not the case right now. And let me explain why. First off, back then, a lot of people had adjustable rate mortgages and balloon loans. They were terrible products. And so as soon as you bought a house, 1 or 2 years later, you either needed to refinance into a new mortgage and hope to God you could get one, or your interest rate and your mortgage payment went up 50%. I don't know the logic behind all of that. It's terrible. I've never sold any of those loans and I would never sell any of those loans. But right now, something like 85 to 90% of US mortgages are on 15 to 30-year fixed rate loans. And 80% roughly of those loans are under 4% interest rate. You have all these people that no longer have the terrible loan programs, and the vast majority of homeowners who do have mortgages refinanced into historically low fixed rate debt. Their monthly payment is extremely comfortable. If they were to sell their house and rent something equivalent right now, it would cost more each month, and they wouldn't be gaining equity or have the potential upside of owning the property. And the big thing they never tell you in these doom and gloom news articles, something like 30 to 40% of all US homes don't even have a mortgage. So if the overwhelming majority, 75, 80% of homeowners either have historically low fixed rate debt and a super comfy payment, or they don't have any mortgage payment at all, how in the world are you going to have millions of forced sellers? You need forced sellers to cause a housing crash. Right now, we have historically low inventory. There's charts out that show that across many metros in the US, inventory is up to 50% to 70% lower right now than it was in 2019 before the pandemic. And even that doesn't even tell the whole story because a lot of those listings are people who have wish pricing. So if someone would come over and give them a boatload of cash, sure, they'll sell their house, but it's not priced to what the market actually would pay. So not only do you have an extreme lack of inventory, there's a significant percentage of sellers who have no intention of selling unless you give them a lottery winning offer. So they're just not realistic. They shouldn't even be counted in the data. Then you have your luxury market. Your luxury market is a significant portion of the listings today. That means housing prices that are 2 to 3 times more than your area median housing price. Those properties, understandably so, are taking longer to sell and having more price cuts. This is an area where if you're a buyer and you are looking to purchase a luxury home right now, if you can find a motivated seller, you might get $100,000 or $200,000 off the sales price and get a killer deal, regardless of where the interest rates are right now. Most homeowners, especially first-time buyers, do not buy luxury. They buy at or below the median house price for the area. You have your entry-level homes, your median priced homes, and your sort of above average, sort of upper middle class homes. The upper middle class homes are still selling, but it's also fairly slow. But there isn't any major price drops in most of those categories nationwide, and especially around Texas. But regarding Austin, you can refer back to my point about the luxury properties. Next up, you have the median and lower priced homes. These are generally for people who are buying for the first time, or maybe they purchased a 2-bed or a 3-bed house. They had another kid or two. Now they want to get another bedroom or two to expand for the family. These homes have extremely low inventory. They are a minority of the current homes that are listed for sale. If you have a median priced home and lower that is turnkey ready to go, you have people banging down your door making offers on it, wanting to buy it right now. Tell me where these housing price drops are going to come from. If most people don't buy luxury homes and luxury home prices drop 20% because the jumbo loans are too unaffordable, who cares? It doesn't impact the vast majority of the population. Winding back very briefly to that super low payment range as well, during the great financial crisis, people had enhanced and extended unemployment benefits. The same thing happened during the pandemic. Right now, for people who do have mortgages, the vast majority of people who have mortgages, their unemployment insurance will be more than their mortgage payment. And I want to rewind one thing even more. During the pandemic, the vast majority of people who are not homeowners may not even remember this. We have something called forbearance. They opened Pandora's box. It's called forbearance. So what happened is, oh, there's an emergency. We're going to let you not pay on your mortgage for an unknown extended period of time. And once things get easier for everybody, we are going to modify your loan and add your missed payments, property tax, and homeowners insurance to your loan amount and extend the term. Extend and pretend. It truly is happening. That Pandora's box is now opened. Do you think any politician, Republican or Democrat, is going to want to say, actually, this is the time we're going to be responsible and we need to kick these people out on the street? No, no, no. They're not going to do that. They're going to say, oh, I need to get voted in again. We're going to turn on that forbearance again for anybody who wants it so nobody gets kicked out of their home. It's really that simple. Finally, I think there's a fear of missing out. There was people who since 2019 have been listening to these fear mongers, the doom and gloom people who could have bought with a 3% down first-time homebuyer loan. They could have put no money down with certain down payment assistance programs and their property values would be up 100, 200, $300,000 depending on the area of the country you're in. There's people who missed out on that. That might never happen again. Of course, that's going to cause a mental shift. That's going to cause people to get angry. It's going to cause people to get angry at themselves, at the government, at the housing market. It's going to cause problems. But simply wishing something changes doesn't mean it's actually going to change. Next up, we have inflation. That's something I wish could change, but it's not going to change. The Federal Reserve broke the housing market, and there's nothing we can do about it. All we can do is adjust and play by the rules of the game. I'm filming this in September of 2023. If you're watching this, you need to understand that the price of everything has increased, and it may never get lower than it is right now because the value of the currency keeps getting devalued by inflation, money printing, endless government spending. Whether you're for or against it, the government causes inflation. If the government is not getting tax revenue in for the dollars it is spending, it borrows that money, it conjures it out of the ether, it literally prints it in an Excel sheet at the Federal Reserve, and every dollar you own in your bank account gets devalued and the cost of everything goes up. So that even though the price of things is going up, It doesn't mean really that the inherent value of those things is changing. It just means that the currency is getting weaker and weaker and more pathetic, and that it costs more and more of that currency unit to buy the same thing it used to. That's the unfortunate fact of the matter. The US dollar is becoming very pathetic. We just happen to be lucky that every other country in the world, for the most part, is printing even more recklessly than we are. So our value of our fiat money printed dollar is relatively still very strong. So to recap, if you're a first-time home buyer, now is a good time. If someone's selling their house in the median price range and their home has been on market for more than 30 days, they need to sell for a reason. You need to find out what that reason is and see if you can give a disrespectful offer to get a great deal, regardless of where interest rates are. Most people think, oh, I'm just going to wait until interest rates go down to 4 or 5% again. That might take 10 years. In the meantime, you could have lost out on $50,000 of principal pay down by buying a house. And there's no guarantee the housing price is going to go down at all either. So if you are looking to buy your first home, get on the property ladder as soon as you can. Not only are you competing with everyone in your city and everyone's complaining that everything's too expensive, you're complaining with all the mass immigration. You're complaining with all the international investors that come from all over the world. In America, because we sell homes to anybody who wants to buy them, you're competing with 8 billion people. You're not competing with people in your zip code necessarily on the houses. So if you're looking to buy that first-time homebuyer house, get in while you can. There's a ton of down payment assistance programs. There are mortgage credit certificates where you can save up to 20% of your interest every year as long as you reside in it with the IRS tax credit. There are many programs to help you get in a house. You do not need 20% down. And based on everything I had just told you, if you are trying to save up to get 20% down before you buy a home, you may never get a home ever. I hope you can. I hope I'm wrong. But the last 10, 20 years has shown massive inflation and price increases in homes. If you are looking to do an upgrade on your house because you have new kids, you have more family, you might have parents-in-law moving in with you, that is a very difficult conundrum because you probably already have a 3-4% mortgage. Your payment is extremely comfortable. And if you want to get one more bedroom, it's going to cost you $100,000 and another $1,000, $2,000 a month more on your mortgage payment. That's not that good of an option. What the best option might be is to expand and renovate your current home. You can do that with home equity lines of credit, and you can do that with home equity loans. You do not need to get a HELOC, which is the credit card for your house, to do home renovations. You can take out money on fixed rate terms over 10, 20, 15, 25, something like that as a second mortgage while keeping your first mortgage. And if you're looking to buy a luxury, well, luxury is a luxury. It's all totally optional. So there's no rush to do so. In fact, I would just wait and poke people, make disrespectful offers over and over and over again until you get a killer deal. There we have it, all three segments of the market: entry level, move up buyer, and luxury. I had to get that off my chest. I see so much misinformation online. I could make another hour-long video on this. Please in the comments tell me down below where you think I'm wrong, if I'm wrong, what you disagree with. Please have a reasoned comment, a reasoned argument, and I would be happy to respond. Make sure to check out all my other informational content about different loan types, first-time homebuyer programs, general mortgage market updates. Nice speaking with you. I'll see you on the other side. Have a good day.